Okay, I am recording the meeting and I will send out a link to the recording a little bit later on so everyone can have it to replay. It's also going to go up on my YouTube channel. So today, knowing which markets to swing trade and when to go long or short. So what I want to do today is actually go over a big picture of how we trade and how we know when to go long or short. And also take a big picture look at what the current markets look like and why to not focus on what people are talking about on television, because they'll just throw you off and mess with your head. It's good to understand how to look at the markets yourself objectively and not be influenced by folks in the media. So let's see now, disclaimer. Anything we're going to be going over is for educational purposes only. What we're showing you today is how myself and Becky approach trading the market and how we go about profiting from the markets. But it's not meant to be trading advice for any particular instrument, but we will show you how we go about trading and the kind of farm strategies which we use. All right. We tend to focus on sectors as opposed to individual stocks. They're much easier to predict movement and directional movements. And I can just buy calls and puts without having to worry about implied volatility in the options. Just making them so overpriced is just unrealistic. So a lot of people will buy a call or a put and it'll decay so much in value before it approaches where they want it to. And you really need to have a well thought out, well-researched plan in place if you're just going to buy calls and puts and hope to be net profitable. So we'll show you how we approach it so that we always maintain 80-something% winning trades. And we, based upon placing thousands of trades, we know this process works as we've been doing it since 2007 or 2008 with this type of trading, just buying calls and puts. So that's how so anything we do, anything I show you is going to be something not theoretical. It works. We've been doing it. I only show you things we actually do. I never show you things in theory. All right, so these are the sectors which we trade. And we have 20-something, like about 28 ETFs to trade these various sectors. We chose these ETFs because option-wise, there's enough open interest and option volume to give us the liquidity which we need to trade. Okay, so that's the reason. There were probably 1,000 ETFs out there that represents these same type of sectors, but most of them don't have enough options to actually give us the opportunity to trade effectively and be able to get in and out of positions when we want to. This grouping does. So that's why this group of ETFs was selected, because it has enough open interest and option volume day to day and week to week so that we can get in and out of positions when we want to. So this is a chart which exists on my homepage on my website. And we'll go back to this in a little bit and look at the longs and shorts. But for now, I'm going to switch over to the big picture monthly chart and take a look at the current markets and where we are at right now. And then I'll come back to the presentation meetup document. Okay. So what you're seeing right now is S&P 500, and this is back in 1998. The blue line is a 40-period simple moving average on a monthly chart. So every candle is 1 month. Okay, this is a big picture look, 1 month. The bigger you make the picture, the less noise there is, and the much easier it is to see what markets are actually doing. And you don't get all freaked out. So when we look at the big picture, so when they're screaming in the news, oh, the market's going to go to zero and you lose all your money, all that stuff, you got to not pay attention to that so much and understand the big picture so you don't freak out, and because the people on media try to freak you out. So this is 1998, massive uptrend. And like I said, each one of these candles is 1 month. This is the S&P. And every couple of years, the market will pull back to this major support level. And if you see 2 consecutive closes below, then it's probably going to be going lower, which it did in 2001 during that market crash. This is 2001 timeframe, and then we're back above in 2003, back above this monthly 40-period moving average. Okay. I've asked, why do we use the 40? We use the 40 because of a gentleman named Oliver Velez. We started going to his presentations at the Traders Expo probably around 2007, 2008 timeframe. And he was someone who used the 40-period moving average on all of his charts as a standard. And we started looking at that too on our charts, and it became a great indicator of trend and a line in the sand. And you're going to see a 40-period moving average on the majority of our charts, which we use, whether it's Forex, futures, options, or stocks or ETFs. There'll be a 40-period moving average somewhere on there, most likely. Okay, so it just became a standard, and that's how we started using the 40-period moving average, not 50, not 30, 40. So here is the market uptrending since 2003. Like I said, every couple of years it pulls back. So here was once again, the 2 consecutive closes. This was at 2008. And that 2008 drop. When you see 2 consecutive closes below, be concerned it's going to go lower. And it did go lower. This was the 2008 drop. This was the bottom of the market in 2009. And then we went back above that 40-period moving average in 2010. Since 2010, we have been above this 40, uptrending 40. And every couple of years, we pull back to it. This was 2011. We pulled back, closed below it, and closed right back above it, and continued our massive uptrend, continuous uptrend. Here we are in 2015. It pulled back. For the long-term investors, every pullback is a great buying opportunity for the long-term investor. When we see the market crashing, and it gets down to here, when people are freaking out, it's going to go down forever. No. That is your opportunity. It's pulling back to major support levels. That is when is ideal for the long-term investor, when you know your big picture. So for the long-term investors, this is a great buying opportunity. So every couple of years when the market pulls back to these levels, this is your buying opportunity for the long-term investors. Not the time to freak out. Okay, so when you understand how the trend and the big picture, you capitalize on these opportunities. Okay, we're in 2019. All right, here, 2018, 2019, we pulled back, went below it for a couple of weeks, right back above, and the trend continues. Here was when everything shut down in 2020. For a couple of months, the market just pulled back hard. These were some of our most profitable trades on our daily charts, because where we would normally see 5, 10, 15, 20% return at our first profit objective, the volatility here was so massive on our short trades. We were seeing 30, 50, 60, 70% returns at just the first target. That's how massive the volatility was on our put options with the gaps as the market dropped. But once again, this drop only lasted a whole 3 weeks. And then massive rally right back above the 40. And this was all the 2020 debacle with COVID and all the shutdowns, okay? And once again, every couple of years, we pull back. When it was months ago, we're pulling back. This is a buying opportunity. It pulled back to the monthly support levels and pulled back, closed right above. And we've just been basically riding the monthly uptrend, which hasn't really been broken for more than a week or two at a time. Since the last time it closed below for 2 weeks consecutively was back in 2010, 13 years ago. Since then, it's closed below for a couple of weeks, and that's it. We're back above in our massive uptrend. No matter what the news is, no matter what's going on, this is our pattern. We have had no major breaks. Like I said, if we see 2 consecutive closes, it might go lower. Until then, during this pullback here, it went from 4,470 something down to 380 something. So they would say, oh, we're in a bear market now, it's dropped 10%. So what? It just pulls back to, here is the big picture. And occasionally the market has to pull back to support levels, and it did. You don't start freaking out. That's why we trade objectively with 100% objective strategies that give us our buy and sell signals, so we don't have to speculate. Some of you are familiar with some of them, and some of you are not. We'll go over them, at least one of them, in more detail. But this is how we look at the big picture. And it's just kind of consolidating right now. Look at it. We had the big rally, the drop a few months back in last year, and then we're just kind of chopping sideways monthly. We're going down for a month, up for a month, down for a month, up for a month. Eventually it's going to break, either up or down, but right now it's just chopping sideways. Okay, when the big move up, now we're into the sideways pattern, and it's consolidating tighter and tighter, and eventually it's going to break out one way or the other. But for right now, it's doing nothing but riding that monthly moving average, and uptrend has not broken at all. All right, so let's go ahead, and I want to switch back to the presentation. And if you want to see the handouts, it's at the link in the chat window. It's on that page. So you can go to that website and you can download it. And I'm going to switch back. At any point in time, if you have any questions on anything whatsoever, just stop me and ask any question you want to ask. Okay. So what you see here, I put this in the presentation a while ago. Someone had asked me, we were talking about, I was working with a coaching client, and we have 20-something ETFs. And I told him we can trade all these different combinations of ETFs and different sectors. And this person only wanted to trade one ETF. They didn't want to make a whole bunch of trades. All they want to trade is one ETF, and all they want to do is the Qs and nothing else, just a NASDAQ. I'm like, well, you're not going to have very many trades if you only trade one thing. If you take all of our valid trades, you might have 1, 2, maybe 3 trades a month, if even that many on one ETF. But if you're trading the grouping of ETFs, you can have anywhere from 10 to 20 to 30 something potential trades or more each month, potential trades. Nope, they only wanted to trade one symbol. Okay, great. So what I did was, just to get a visual, I put all the trades for one symbol onto one chart for 1 year to see what it really looks like long and short with all of our trade signals. There's a question. There's a demand zone right above 360 on X that can chart on that chart you showed. We can either retest or break out. Yeah, it can go either way, and we couldn't care less which way it goes. When we get our buy signal, then we'll go long with an 84% probability of having a winning trade. Or if we get a sell signal, we'll go short with put options, and with an 84% or higher probability of having a winning trade. But until then, all we care about is waiting for our buy and sell signals. Until then, we do nothing. When the signal happens, it's pure technical, then we take our trades. Like we stopped doing all that looks like zone stuff. Yeah, it's conceptually all those different things that you have that looks like, feels like, could happen. Anything that's objective, we don't do anymore. We used to do that, but if I show you something that's subjective, if 10 people look at the same chart and can come up with 6 or 7 different opinions, then that's not useful to us. We don't trade it. We do nothing with it. It can't be repeated. If I show you something where I show it to 100 different people following a set of rules, those 100 different people will come up with the exact same results and outcome and expectation. That's how we trade. So if it's subjective, we don't touch it. We've learned many of those type of strategies, but we really settled in on stuff that's repeatable, that can be shown and taught and repeated. And that's what worked for us to generate income consistently, very consistently, especially during COVID shutdowns, when this was basically my only real income was trading. Everything else was sort of came to a halt. All right, so this works. So here's what it looked like in 2020 on NASDAQ. We had a total of 40-something trades, 41 trades with 3 losses. That's about 90-something% wins, whatever that percentage is. Becky, what percentage is this if we had 41 trades and 3 losses? And other people out there, pull out a calculator. I'll be asking questions later on, most likely. But what percentage wins is this? 41 trades with 3 losses. Becky, I'll have you do this one quickly. Just type it in. 41 trades with 3 losses. What's that percentage wins? 93%. This was in a year when people were like freaking out because of COVID. It was one of the best years ever for trading and profitability. Okay, this is just one ETF. Now picture trading a group of ETFs in a similar way. Now I'm going to actually zoom in on this in a different image so we can take a closer look at it to see the different buy and sell signals, so you get a better understanding of it. Okay, this is the graphic of it. So let me zoom in some more. Okay. So this is the Qs in 2020. And what we did here, or what I did here for this, is put arrows indicating when we had the various buy and sell signals for the various strategies, which are part of the full package, which we do, the full grouping: daily chart strategies, weekly chart strategies, and market internals. Market internals are a group of strategies that combine market sentiment using the put-call ratio of the market combined with technical buy and sell signals. We'll usually see the buy signals at literally the bottom of markets, and it will usually be the first buy signals we see. So when you see market internals buys here, it's usually after market pullback, we get a buy signal, but it's generated from the market internals combined with our some technical strategies. It's a great confirming indicator for market bottoms. You see it here also after this big drop in 2020, when everyone thought the market was going to keep dropping and dropping and dropping because everything in the world was shutting down. The United States was shutting down, everything was shutting down, the market just kept collapsing. This is when we were getting our buy signal down here. We literally got off our buy signals down here at the very bottom, which gave us the chance to ride this baby up. So we got into, this is on the Dow, NASDAQ, S&P, and the Russell 2000. We got our buy signals down, the Dow, NASDAQ, and S&P, the 3 biggest ones. So we were able to ride this up because we got our buy signals down here. Our other strategies, grouping of strategies, where it says Danshin, Ichimoku, and the weeklies, those came a little bit later on. But the internals are usually the very first trade signals at the very bottom. So this is extremely profitable for us, buying the bottom of the market and riding these up. So this rally here was great for us. And anyone we were coaching, it's just one of those beautiful times to trade. When everyone is freaking out is when we're making money, because we don't rely on listening to the people on the news, on CNBC or Bloomberg, because their job is not to show you this. Okay, they have other purposes, and they have to make things sound exciting, and they also report in what's happening in that particular moment in time. The next day when the market's up, they stop talking about it. But the day the market's down, oh my goodness, and they try to freak you out. Don't listen to them. Know your charts and your trade signals so you know when to go long. So when we have our market internals buys, that's when to go long. When we have Danshin buys, Ichimoku buys, that's when to go long. W means weekly. On a weekly chart strategies is when to go long. Okay. Squeeze sell. We get our sell signal on this day. Quick trade in the next day, out. Targets hit within a day. Okay. That is why we have to be objective, and you're gonna see, I'll show you a snapshot of some of our stats for our strategies. Knowing how big to make a profit objective is really key. We can't just randomly, arbitrarily in our own head say, I want the market to move this much. The market doesn't care what you want. And no, the market doesn't care how much you want it to move. We have to know statistically, given a particular set of circumstances, historically, how much will the market move in that direction of our choice, and to what magnitude and within what amount of time. Okay. Then we can trade this with options. If we know how much we expect it to move, what percentage of the time should happen, and the magnitude to how much it should move and how much time it'll take, we can put an option trade on with a call or put. But we can't just make stuff up in our own head. So what most of us would tend to do, even what we did when we started out, we would literally come up with an idea in our own heads, which is what most traders do. They'd literally come up with an idea in their own heads, unilaterally in our own minds, declare it to be true, not based on anything statistically, we just in our own heads. Well, this is going to happen. This is going to happen. The market's going to go down this much. And when we place a trade and lose all of our money and then wonder why. Or we'll make money once, lose money once, make money, lose money, and not end up making anything in the long run. Because we just make stuff up in our own heads and unilaterally declare it to be true. And we stopped doing that a long time ago. So anything we do, we statistically know, if I see this trade signal, I know that statistically it's going to move a certain amount lower within a given amount of time. So I can go ahead and place a trade for just that amount, grab my profit. If it keeps going more, great, I can trail stops on remaining contracts after my first profit target is hit. Squeeze sell. I get a sell signal in the next day, market targets hit within 1 or 2 days. Sell signal, I put my trade on, markets hit. Targets hit within about a week. Weekly sell, hit within a month and a half. Another squeeze sell, hit pretty much right away. And now we got the market's been going down, 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 down. What do we have? The same thing over here. The market was going down. We got our market internals buys. After pullback, we get the internals buys as our first buy signal. Then the Donchians. Okay. Market's pulling back. We got our market internals buys. I've had people recently ask me about the market internals. Here's where the market internals come into place. After a market pulls back, the first buy signals is usually the internals. Okay. And then we just write it up. So we sell, so we trade everything up. We wait for our sell signal, buy our puts on our buy signals, go long. Keep in mind, the person that only wanted to trade the Qs, they can take all these trades. You don't have to have one trade on one symbol. You can take 5, 6, 7, 8 trades on the same symbol. You just manage each trade separately. One trade has nothing to do with another trade. They're managed separately. We know 90-something% wins. Money adds up really fast. Okay. And here we are. This was through 2020. Ended with, after this pullback, multiple internals buys right at the very bottom, market internals, plus the other buy signals, and just writing it on up into the end of 2020. 2020, just an extremely profitable year. This gives you a big picture feel for how we look for buy signals and sell signals and know when to go long and when to go short. It's purely by our strategies and looking for the signals generated by our strategies. That we'll go over one of those strategies for the on the long side because they're kind of coming up now. And then we'll take a look at a few other things also in profitability. So anyway, any questions so far on anything whatsoever, feel free to ask, unmute, ask, or type it in. If you raise your hand, I won't see it. Most likely to just unmute, or you can type it in, I will see the chat window. All right, so I'm going to switch back to the presentation for a moment. And then we go to a daily chart. And first, I want to show you the stats, what things actually look like. So again, these are the sectors which we trade with ETFs. And this is an example of one of the strategies, not one we're going over today. This is saved for the coaching clients, but it'll give you an example of how we track what to trade. We only deal with ETFs where we expect over 84% wins. Anything you see in a rectangle with shaded in blue is 84% wins or higher. So if we got a trade signal valid on EFA, okay, that's Australia. If you want to trade Australian markets, we know how much time we want in it. One expiration cycle is basically 1 month. 2 expiration cycles is basically 2 to 3 months, depending on how the calendar is working, but approximately 2 months worth of time. 1 expiration cycle, approximately 1 month worth of time. If we got a trade valid on EFA, we are not going to only allow 1 month of time in the option, because the win percentage historically, and when I say historically, it's since the beginning of that ETF. So all our stats, which you see here for win percentage, dates back to either 1999 or when the ETF was created. A lot of the ETFs were created in 2005, 2006, and other like the Qs, SPY, they go back way further, and we'll have stats on those. Those stats date back to 1999. So I know I'm going to be going 2 months worth of time to expiration cycles with 87% wins. I'm not going to, this is how we know how much time. And this is the things we provide to our coaching clients every couple of months. We update this quarterly. So if I wanted to trade IBB, biotech, and again, I know this is way too low for 1 expiration cycle, but so I'm going to need 2 expiration cycles. Okay. Natural gas. If I get a buy signal on natural gas, I'm not going to do 1 expiration cycle. I'm going to go 2. If I got a buy signal on the S&P 500 SPY, I have a choice of 1 expiration cycle or 2. They're both good. 1 expiration cycle option costs a little bit less. 2 expiration cycles are your upfront costs a little bit more because you're buying more time. However, you have a higher probability of not having a loss, of having a winning trade. So trade-off, those are business decisions you make given the objective information. We can't trade without these numbers. Without these numbers, we cannot trade the way we trade. Becky maintains these stats. She's a co-host and also my trading partner. I do not put numbers into rectangular boxes. Anyone who knows me knows that. I do not put numbers in rectangular boxes. Becky is a database manager. That's her profession, and she manages numbers and information. So her responsibility is to maintain the stats. She does that daily, weekly, so on and so forth, maintains all this for us. And we update this for our coaching clients every 3 months. We send updated stats. So everyone has this fresh current with them every 3 months. So this is one of the strategies, long and short. So there's a stats on the long side. And for that same strategy, the Donchian T-line, these are the stats on the short side. So again, we know not every ETF trades the same. People think they can trade one strategy for everything, and they wonder why they lose money, because it doesn't really work like that. You have to know what works on on which sectors, because trading the Dow is not the same as trading silver. It's not the same as trading natural gas, and it's not the same as trading interest rates. It's not the same as trading oil. So different strategies work on different things differently. So, but once we have that laid out, you can see, well, this works pretty well on DIA, the Dow, works extremely well on GDX, gold mining stocks. Also, one of my favorite sectors to trade is GDX, gold mining stocks. They work, I love GDX, lots of open interest and very easy to get in and out of, and the options are fairly priced, not too expensive. Natural gas, great. All right, going down a little bit, another strategy, one of our hook strategies. Once again, the more time you have, the higher the probability of success. You can see that by the extra block shaded in light blue. Okay, and you'll, generally speaking, the numbers increase percentage-wise when you have more time. By having this information, we know not only when to go long or short with the strategies giving us our buy and sell signals, but we know how much time to allow in the option, because that's one of the biggest questions. So how much time in the option? Is it a week? Is it a month? Is it how much time? Is it 6 months? And we also have criteria for option pricing. How much is too much to pay up front? That I focus on with coaching clients. Some of you already know it, but for coaching clients, we go through that, how much intrinsic value, extrinsic value to consider, so on and so forth, before the option is just too expensive. We just pass and look for better opportunity. This is a strategy for buying market bottoms. This is, besides the market internals, this is a strategy you will see we look forward to for market bottoms. This is the first buy signal we usually see. It's one of the Ichimoku strategies. It's one of the first ones where we see our very first buy signal, the extremely reliable trade signal. And this is one we look for. Once again, I go over this with coaching clients, how to get in at basically market bottoms as it's starting to turn, as the market's been dropping, starting to turn up. This is one of our technical signals. The only one getting in even lower than this is the internals, which is market sentiment, looking behind the scenes. And this is our strategy for market tops. So when we short market tops, finding a market top is not that difficult at all. It's that people who know how to do it don't want to show you because they want to sell you a subscription service, so on and so forth. So you buy trade signals. I believe in teaching people how to fish so they can fish themselves forever and feed themselves. Same thing with trading. I want to teach you how to, you don't need to, someone else showing you how to find trade signals. You can do that yourself. It's not that hard. You just have to do the work. And this work just takes a few minutes a day once you've put in some time up front. But this is, in just this year alone, this sell signal has just been awesome because we just caught all the markets on the way down. I'll take a look at that in a moment, but this is how we know when to sell, by using these strategies. When to go long, when to go short, not guessing, 100% objective, go with the plan and go with the strategies. But you can spend time making up strategies, or you can leverage knowledge already gained from others. Like what I'm showing you, I'm going to go take a look at the trades we've had this year and some previous year. So this is the trades from this year through the end of February. At the end of March, Becky will update all of these, and I'm sure there'll be 1 or 2 extra losses coming in because the trades were initiated back in January. It might be a loss for March, but this was through the end of February. This is what things look like basically through the end of February, from trades valid in January through the end of February. There were no losses because, number one, you can't have a loss because there's no expiration. It's just booking profits, because they all have enough time in the option, just book profits, book profits, book profits. So when losses will eventually come, losses have to happen. But in the meantime, you book profits. So what I was saying about that sell signal, here were all those sell signals from the end of January through the first half of February. We literally caught all the market tops for all these different sectors and symbols. Okay. Those are all sell signals for all these different sectors and symbols. And these were just incredibly profitable. We literally only have sell signals, and we just buy our puts and write it down as much as you can. The more capitalized you are, the more well-funded you are, the more you can make, because the more contracts you can get, and you can trade beyond the first target. The first target, we capture profit, put money in our pockets. After that, we use secondary targets and a trailing stop loss to protect profits which you already have. And so the more funded you are, the more money you can make. Just like the good old thing, the more money you have, the more you can make. The same in trading. If you are well funded, you can get multiple contracts, and it requires more work to make more money, but it's up to you. Some people just like the first target only. They put in a trade, put in a first profit objective, and boom, done. And we'll take a look at on our daily chart in a moment for what those profit targets are. But this is this year, and we usually run totals for the year, so 400% wins at least through the end of February. Going back to 2022, all the wins and losses have already been incorporated. Here is the total numbers. Total 80-something% winning trades overall. The short side had a bigger win percentage than the long side last year. But as long as you're consistent, you make money. 2021, 91% wins on the long side, 85% wins on the short side. Here are the total numbers. That's with all the different strategies being traded as a group. Realistically, you can't take every trade, but if you can shoot for 10 to 15 trades a month, you'll do really well. And you can just take a look at how much you can, just like this year, you can go through weeks and weeks and weeks and months without having a losing trade, and it just keep putting money in your pocket, and it just sort of adds up. 2020, 92% wins on 92% wins on the long side, 87% wins on the short side. Once again, just keep booking profits. 2019, here are the wins percentages once again. So I'd asked Becky to put this spreadsheet together a while back, so give people a feel for our trade signals and knowing when to go long and when to go short. So if you wanted to do a project for yourself, like I showed with all the buy and sell signals on the chart for a particular symbol, these spreadsheets exist on our website. Okay, on that same page where you got the handout, the spreadsheet, the whole spreadsheet you're seeing right now exists on the website. You can go in, you can sort by symbol, and you can literally put a chart up and label the chart the exact same way, long and short, and all the buy and sell signals, and then see the percentages of wins and losses on a particular symbol for the last several years. Our stats actually go back to 1999, but I just asked Becky to put together the last several years so people get a good feel for what our strategies look like for the big picture. So it's a good exercise, because some people don't want to trade a lot of strategies. All they want to trade is a certain small handful. Which web address? I'm going to put that in for you in a moment, Mary. Just 1 second. I want to change the share. Share. Okay. So see. So Mary, take a look at the website. I just put in the link in the chat window, and it's on that page. You should be seeing it right now. Here are the handouts, and here's the listing of the trades. We have some of the weekly stuff there too. Yeah, we had some weekly trade setups there also, one of the videos. And also that same chart is on our website at the bottom of the page that you can also reference. It's on that same page. I think I put it on the home page also. It's a really good chart to look at to really get a good understanding of the big picture of how all the strategies work together. Like if you only wanted to trade let's say you wanted to trade one symbol that represented the major indices, always trade the Qs. If you can afford it, trade the Qs, as long as you can afford it. The Qs should always be part of your trading portfolio as long as you can afford it, because it's not always cheap. And then you have the other symbols from, like I said, from my coaching clients. I'll give you the stat. You'll have that updated every 3 months, all those details and trading plans for coaching clients. So you can trade a limited number of symbols, and just for fun, you can put together a chart that looks like this and get a, wow, I can trade this one symbol up and down like this and do nothing else. So you can literally make a good annual living return on trading a small handful of symbols up and down, just taking every trade that you can afford. The more, you might have 3-4 trades on at the same time on the same symbol, but there's nothing wrong with that. So, and just talk to me, check with me about that, and I can help you with that to make sure you're doing it right. But it's really important to have the right target. All right, I'm going to switch over to a daily chart now, just to go through one strategy real quickly, but some of you have seen it before, but it'll give you an idea of the strategies. Let's see. Okay. What you're looking at right now is one of my favorite symbols to trade, which is XLB. It's the materials sector, XLB, the materials sector. I really like XLB because the options are liquid. The option pricing is reasonable, meaning a couple $100 for one contract, not like $1,800 type. These are usually a couple $100 for one contract. Good volume, good liquidity. And every one of our strategies we traded on, it's a really high win-loss percentage. And I'm talking 87 to 90 something percent wins on any of our strategies. So I like to trade XLB up or down whenever it becomes valid. And not everything is on the chart right now. I'm not sure I have enough on the chart right now to show you one strategy. There's more that goes on the chart. But I want to show you the Donchian cross. And if you take a look at the spreadsheet, when you get a chance, you will see XLB and you will see the Donchian cross as one of the strategies on the spreadsheet. So this is what the Donchian cross is. This orange line is part of the Donchian channel. This orange line, and the blue line is my 40-period moving average. The 40, that's on all of our charts. That's this blue line. The 40-period is a daily chart now. 40-period simple moving average. This is our Donchian channel. Okay. And this dotted line is a Bollinger Band, upper Bollinger Band only. I'm not showing the middle and lower Bollinger Band because we don't use it for the strategy. So I don't put stuff on the chart that just takes up space and creates clutter. So I try to keep what's on the chart, the only stuff we actually use. So what I look for here, so take a look at the data box here. And what we're using here is NinjaTrader. You can do this on Thinkorswim also. A lot of you use Thinkorswim. So either Thinkorswim or NinjaTrader. So for my coaching clients, I will provide you the charts and the indicators and everything you need to set up NinjaTrader. And I will provide you everything you need pre-set up, just ready for use on Thinkorswim also. So for Thinkorswim and NinjaTrader, I'll take care of you for all the coaching clients. That's easy. So if you try to set this up yourself, you'll come close, but it won't match what we do. Use 10 different people setting up a chart by themselves, but set it up 10 different ways, and it just doesn't work out. Okay. That's why I try to make sure everyone has set up the same way, has the same view, has the same everything, because one person might be looking at the bid price, one person might be looking at the ask price, one person might be looking at the last price, and those are all options we have when we set up a chart, and different defaults or different data sources. Different data sources will give you different results also. So that's why I like to make sure that everyone has the chart set up the same way, so we all see the same thing the same way. So when I see this orange line cross, let's say this is a day I'm looking for the orange line to cross above the blue line. So I'm going through all my list of ETFs. I get to this one. I'm looking for the Donchian cross. Did Donchian cross on that day? Nope, did not cross. The next day, did it cross over? Nope. Next day, did orange line cross the blue line? Nope. Next ETF, I just go through really fast. Did it cross? Nope. Did it cross? Nope. Did it cross? Nope. Hey, this day I looked at my data and the orange line crossed over the blue line. That is my buy signal. My setup. There's a setup, trigger, and trade management terminology from Jake Bernstein. This is visually what I look for. It's my setup. I'm looking for the orange line to cross the blue line. Very easy visual setup. If you know how to program this stuff on the different platforms, you can write a scan that looks for that. Okay. And then there's criteria for how many days it had to have been below the blue line and closing above or below the Bollinger Bands. That's it. So I have my setup. I'll let you know this is a valid setup. Whenever I see this happen, because this is one of our Donchian cross strategies, which we've gone through literally hundreds and hundreds and hundreds of trades on 20-something different ETFs. I know, going back to 1999, that on this particular ETF, I know I'm going to have about 87 to 90-something% winning trades if I take a trade with this setup. Okay. Another indicator on the chart in the bottom called the ATR. ATR is average true range. It's a measure of market volatility. Okay. Not option volatility. We're not doing option analysis. We're not complicating things. We're using options to trade, but we're not doing option analysis. I stopped doing that type of stuff so long ago. No more spreads, just plain old buy calls and puts. Before I had done any of these strategies, I've been presenting these at some of the local groups like SVOG and TOP. Some of you are part of those. And for the San Francisco group, that was, I've been doing that since 2007. And one of the guys in the group who had advanced degrees in statistics, that was Dan. What I would do is have him take my strategies and test them out independently. And also have some people like PJ take a look at my strategies and tell me, can you come up with a way to trade these, number one, with a spread that is going to be better than just buying calls or puts? And number two, to verify that the strategies are giving me the percentage wins that I'm showing. I wanted a second set of knowledge and eyes showing me, if you can show me a better way to do this than buying calls and puts, I want to know it. I'm going to go with that. If you can show me a better, that I need someone who I trust to verify that my win-loss percentage I'm seeing is the same as, is in fact true. So I let those give them everything, and they came back to me, said, my analysis is good. And even people, some of you know PJ, he's just great at spreads and doing that type of trades, more advanced strategies. And he came back and said, just buy calls and puts, because this is a strategy that's meant for just buying calls and puts. There are strategies meant for buying spreads, and their strategy is meant for just buying calls and puts. This is a pure, straight up directional trade. You buy a call or puts. That's it. So you take a look at the data box, the ATR here, average true range. That's on saying on average, every 5 days, this ETF moves $1.43 on average. So what does that mean? That's the volatility of the underlying ETF, not the option, of the underlying XLB ETF. It's moving on average $1.43 every day. Okay, someone pull out a calculator when asking you to do a calculator. Okay, who it is? Anyone except Becky. So someone pull out a calculator, either on your computer, on your phone, wherever, get a calculator. I'm going to be asking you to do a calculation. I'm going to need a number in order to continue. The very next day, the market opened at $83.10, right here up in the data box. It opened the next day at 83.10. What is a 83.10 plus $1.43? Should be an easy one. What's 83.10 plus $1.43? 83.10 plus 143 is how much? 84.53. Thank you, Mary and Alexi. That is going to be our first profit target for this trade. Okay. We enter this trade when the ETF is at or below the open price the very next day. So the very next day, the open price was 83.10. When the ETF is at or below 83.10 is when we're buying a call option 1 or 2 months out. It'll be the first strike in the money. So if we buy it this day, it's going to be the 83 strike, assuming an option, a strike every point. It'll be the 83 contract, excuse me, the 83 strike, and that would either be a March or April contract. If the trade is valid on 1/27/23, then we're looking at a March or April option. That's 1 month out or 2 months out. Okay, and that I go through in much more detail with coaching clients. Let's say I didn't get in that day. This trade is valid up until the first target is reached, and as long as you're below this open price. On this first day, it went as high as 83.99, but the target is 84.53. So the first target was not reached yet. So this trade's still in play. The next day, it opened at 82.89 and went as low as 82.72. We could have gotten into this trade the next day, 2 days later, with the 82 strike. Okay, let's say that we got in the next day at the open, right at the open we got in. Okay, that day it opened at 82.89. We know our target is 84.53. What is 84.53 minus 82.89? Again, 84.53 minus 82.89. What is that amount? 84.53 minus 82.89. $1.69. Okay. Now, if we did not get into the market this day, for whatever reason, we had other things to do, we don't wake up in time, whatever it might be, you didn't care to trade that day, you had your family, you had to travel, you had to go to work, whatever, just didn't get to it. You don't have to stress over this stuff. The next day, it's still, you know, the entry, you looked at that stuff after hour, hey, you know, that market opened down this morning, and you know, you have an opportunity, you didn't get in yesterday, so you think, man, I might have missed it. Then the next day you see it open lower. I'm like, hey, wait a second, let me go ahead and get in now. So now you're going to get in, and instead of having $1.43 target, now you have $1.69 first target. You now have a much more profitable trade because your target got bigger because from getting in the next day. Okay, instead of $1.43 move from the open this day, now you have $1.69 move from this day, potentially even lower. Next day it shot up. High that day was 84.68, and the target is 84.53. During this day, your first target's hit. Okay, so just getting in a day later can create anywhere from 5, 10, 15% higher returns just by chance, just by getting in at a lower price. Now you have a bigger target. And most of my trades are more like this. I don't rush to get into the open the next day. I don't get up for that. Most of my trades have a bigger than expected target because I get in very casually and comfortably. I don't stress over it. We always getting in, for Mary, we always getting in the money. So it's always going to be a 50 something delta or higher because it's always the first in the money option. Always, always, always. I think you might have some of the old trading plans with some of the old strategies with the Ichimoku, and they're all still good. Everything still works, but it's always a 50 something delta option. That's very rarely 60, but usually 53 to 57 delta, usually the first strike in the money. We don't need to go more deeper in the money because as soon as this market start moving, you're already deeper in the money really, really fast. But we never, ever, 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 under any circumstances, buy out of the money options because you have to assume that we don't start making money until we're in the money. So we always buy in the money option. So it's always worth something. Some of you might be new, may not know quite what I mean by that, but if it's not in the money, it's worth nothing. You have to assume it's worth nothing unless it's in the money. Okay. This setup happens all the time. It's usually like here. Literally, we're going to get our market internals buys over here someplace. And then we're going to get our Ichimoku buys right over here someplace. And then we're going to get our Danshin cross right here, crossover, cha-ching. Massive, massive rally end of last year, which we caught. Number one, this is not just one ETF happening. This is a whole group of ETFs with the same buy signal. I always tell people every single year, October through April, make sure you're in it because this is what October through April usually looks like, whether it's up or down. It gives you a nice big trend. Okay, so this was last year, end of the year, perfect time, got our buy signal. So we know when to buy. This is the day. That's our trade signal. That's when to buy. If you're trading multiple targets, this market never pulled back. So our first target is hit within a couple of days and just kept going up. So if you, let's say you had 3 contracts, you sell 2 at the first target, and after that, you put in a secondary target and a stop loss on that 3rd contract. And you can double or triple your money on that 3rd contract. Just keep trailing a stop up to lock in more and more profit on it. You don't try to maximize profits on the first half of the trade. That's just cash flow. You need to lock in money on the first half of the flow as quickly as possible. That's cash flow in your money, in your pocket, guaranteed profits. We try to get the bigger returns after the first target is reached. We manage positions to get bigger returns after the first target, not before the first target. Before the first target, just carefree trading, place your trade, walk away. After the first target is reached, then we look to get the bigger returns on the remaining contracts. And that's the fun part, but it requires more work. And you see, we go back, this happens over and over again. Orange line cross the blue line, cha-ching. Orange line crosses the blue line. When orange line crosses the blue line, that's a loss, the definite loss. Orange line crosses the blue line, cha-ching, just shoots up. Orange line crosses the blue line. This won't be a valid trade because it's above the Bollinger Band. So we don't want stuff above the Bollinger Band because it tends to pull back. Orange line crosses the blue line, cha-ching. Orange line crosses the blue line, cha-ching. Orange line crosses the blue line, and so on and so forth. We know when to buy. When we go over the other strategies, they're all one-on-one with people, we know when to sell. So the stats I showed you before, it shows you what to expect, the strategies for the buy side, strategies for the short side, but it's always when to buy, when to sell. And what we do is end up painting a picture at the end of the year that you can go back and look at, and it will tend to look just like this. You know when to buy, you got your Danshin crossover or Danshin T lines. You know when to buy, you know when to sell. Remember I said the squeezes are always at the top of the market, top of the market. Let's close this. This is an older deal. And I'm going to change that share back to, let's see, okay. So when you're taking a look at that in your PDF of the handout, you can actually just sort of zoom in on it and be able to see the same buys and sells that's on there. So you just zoom in and you can see everything because it's a PDF, so that's no problem. And our strategies, anyone, if you take a look at our YouTube channel, there are some videos on there that go through that Donchian setup even more detail, but it is pretty straightforward. It's the crossover of the Donchian over the 40-period moving average. Very little else after that, very little. And if you set it up for yourself, test it out yourself. It works well on ETFs, not leverage ETFs, just regular ETFs. Not if you do it on stocks, it's up to you to figure it out if it works on stocks or not, but it's usually more involved with stocks. These strategies work extremely well on the sector ETFs and for just buying calls and puts, and that's mainly because of implied volatility. We don't have to deal with implied volatility issues that you would have to deal with on individual stocks. There's no volatility crush. There's nothing like that that happens after earnings. We don't have to worry about earnings. We don't have to worry about the stock dropping 30% overnight. Those issues don't exist with our ETFs. And it's a very smooth trading up and down. So that's why we just buy calls and puts, and it works really, really, really well. Try to get in 10, 15 trades a month. And if you're risking more than 2-3% of your account on one trade, then I'd have to talk to you, because why are you doing that unless you have a really small account? If you have a really small account, you might be. If you have a bigger size account and you're risking more than 2 or 3% of your account on one trade, that's really big amount of risk, because if you take a couple of losses, because most people think about what they can make, they'll see all these strategies, it's like 85, 90 something% win. So they will risk 10% of their account, 20% of their account in one trade, thinking, well, it's 90 something% wins. But what people, and it's true, you're going to make good money, but what people don't always think about is that at some point in time, the reality is you are guaranteed beyond any shadow of a doubt to have 3, 4, 5 losses in a row. Guaranteed, doesn't matter what the strategy is. We saw several of those happen in 2022. You're guaranteed to have 3, 4, 5 losses in a row. If you wipe out 20, 30, 40, 50% of your account in 1 month or more, because you're placing really big risk trades that risk a big percentage of your account, you can't recover from that. Sorry, it won't work. That's why we keep our risk at 2% account risk per trade. That means if you have a $100,000 account, you shouldn't be really risking more than 2 or 3% of your account in one trade. To clarify what that means, if everything went horribly wrong with that trade, you won't lose more than 2 or 3% of your account. If everything went horribly wrong, you will not lose more than that. If you have a smaller account, maybe $10,000, realistically, you might be risking 4 to 5% of your account per trade, because the reality is you need to risk at least $400 or $500 on one trade. So it limits the number of ETFs you can trade, because some of the ETF options are too expensive. You can't trade DIAQs, certain IBB, you just can't do it. The options cost too much. So that's why we customize what you trade. So when I'm working with you, we're going to evaluate how big your actual real account size is and make sure you are trading ETFs that are appropriate for your account. Because not everyone can trade the big boy accounts. Those you can, not everyone should be able to trade DIA at $1,200, $1,600, $1,800 for one contract. That's just not realistic for most people. And because that's going to represent such a huge percentage of their account, you just can't do it. So, but you trade other ETFs where the cost anywhere from $100 to maybe $200, $300 a contract. That's going to be more realistic for a lot of people, and maybe might have to trade 1 or 2 contracts only. and keep your total trade size down to a couple $100, and then we can kind of build on that and learn from that. So that's not a problem. But you can't just wipe out big chunks of your account in one shot and hope to be able to recover. The numbers don't work like that. It just don't work out like that at all. So, and I'd go over how much you expect to make realistically. Some of you have seen the presentations where I've done that. If you go on a YouTube channel and take a look at some of the older videos, you might see me go through some of that also. But right now, do we have any questions on at all on anything at all on any of the strategies that we might have touched on? The big picture of how we look at how we trade a particular sector up and down, knowing when to buy, when to sell. I can only show you one strategy, the rest are really for coaching clients. So the downstream strategy, I can show you that in detail. That's the one long signal is one of Becky's favorites because the numbers are so ridiculously high, percentage-wise on wins for most of the ETFs. What was your returns for the last 3 to 4 years? The stats are all on the, everything is on the website, all those trades, that's it. Let's take a look at it. How much you make is how much, it all depends on how many trades you take and when you got in. I get most of my trades, I get a 20 to 60% return to first target. That's because I don't get in at the opening, I get in at a better price than expected. So all with your 10 different people can place the same trade and have 10 different sets of returns. Trade you place may not be the same trade I place. There are 20 to 40 something trades valid every month, which 10 to 15 trades you place will not be the same 10 to 15 trades I place, may not be the same 20 something trades someone else trades. It won't be the day I get into it, one trade will not be the same day you get into the exact same trade, will not be the same day another person gets into the exact same trade. And we might all have winning trades trading that same buy or sell signal, but we all got into it on different days, on different weeks, at different prices, at different strikes. So our final results will be different. And once you're in, if I get in, if my original target was going to be 1 point, but I got in 3 points lower than expected, I now have flexibility how big I want to make my target in from 1 point to 3 or 4 points. So there are so many nuances of how to increase profitability. I just showed you the foundation of when to get in, but overall returns is how much effort you put into it. If you only trade first target only, you can expect a 10 to 20% annual return on your account, just trading first target only, 10 to 15 trades a month. No effort, just place your trades, walk away. If you want more, you have to do more work. You have to be trading multiple contracts, multiple targets, and don't screw up and make mistakes that very often. You can have 3 people trading 3 contracts. Let's say same trade, 3 contracts. One person exits all 3 contracts at the first target. They're done. They grab their 15, 16, 17% return, 20% return, they're done. Second person, they decide that they're going to sell 2 contracts at the first target and then trail a stop on the last 1/3. And that's one set of returns. The third person might decide they want to sell 1 contract at the first target. They have a second target where they sell 1 contract and a third target where they sell 1 contract. So 3 different people, exact same trade, will have 3 different sets of results because those are business decisions you have to make. So I have to show you when I work with you, here are your choices, the things you can do. Here is your entry. What do you want to do? And it's all going to be based on your personality. Some people don't want to do all that work to do multiple contracts. It requires bookkeeping and keeping track of contracts and which contract goes with which trade. Some people don't want to do that, can't do that, not good at it, then just trade the first target. It all depends on you, your personality, so on and so forth. And that's all stuff I work with you to work out, because most people start on just 1 contract, assuming just 1 target only, because it's easy. And if you have time and desire, then I'll show you how to do multiple targets with multiple contracts. But it all depends on, once again, your lifestyle and personality. A lot of people, it sounds really good. I'm going to grab this trade. I'm going to be in it for like weeks and weeks and weeks and trail my stop. And it's like, how do you plan on doing that when you're on a train to work at 6:30 every morning? you work a job where you can't get away from your computer all day long, and then you're back on a train in the afternoon after the market's closed, and then you don't, it ain't going to work. Then when you get home, you have to take care of your pets and your family and everything else, and it's just unrealistic. So real life will factor into how you trade and your profits also. Real life does count a lot. I know one person, they have, because of their work and family, literally work and family, it's really limited what they can do, even though they know how to do it, but reality takes over. So, but once again, I'll work with you to figure out what we can do. Some people only trade the weekly strategies because they can do some work on the weekend, place the trade Monday mornings, and then they're done. That's it. That's all they can do. So they just focus on the weekly only, and then when they have time, they'll go to some dailies, but the weekly is what they do just to be in the market. And that works fine too. It gets about 10, 12 trades a month on average. How many trades a month on average does the Donchian signal setup down? Well, there are multiple Donchian signals. Go to Mary, just download the spreadsheet and sort through it, and you'll see it's all on there for the last several years. Because you only get a buy signal on the way up, that has to come all the way back down to get another buy signal. So you get several signals a year, but the market goes up once, takes what, 2-3 months to come back down to get another buy signal on the same ETF. So you're going to get maybe 3 to 4 buy signals a year on any one ETF, maybe 5 sometimes. But like I said, you have the spreadsheet. Just sort through the spreadsheet by symbol or by strategy, or by symbol and then by strategy. Then you will see how many trades happen with each symbol, with each strategy. So all information is there for you, totally out there. Those are all the trades valid since 2019. We have the trades going back further, but that's a lot of work. But just ask Becky to do that so that people can see and go and do their own research for themselves, so they fully understand it and what to expect. All right. My shooting for less than an hour and a half this afternoon, because we can do this like forever, basically. Do we have any questions? We might do a futures meetup next time. It's been a while since we do that. That's always a lot more work for the futures, but last year was not a profitable year for the futures, but previous several years extremely profitable, and this year back to being wicked profitable again. So we might do another futures meetup in another few weeks. But do we have any questions so far on any of the option strategies whatsoever? Anything at all? Like I said, all the trades are on there. How many trading strategies do you have? In the daily charts strategies, there are 6. Hold on a second. The stats. Okay, this is one of them for the shorting the tops. The bottoms, buying the bottoms, that's 2. The hook buy, that's 3. T-line sell, that's 4. T-line buy, that's 5. And the Donchian cross, which you've seen me do in the presentations, that's 6. So those are the, let's switch back. So those are the 6 strategies for the daily chart program. And that is going down to, that's this one here. So for people who are interested in that program, that's $17.50. And for people in my meetup group, I usually give $100 discount, so $16.50 for anyone in my meetup. Just let me know before the week is over, and I'll take $100 off of that. But that is our bread and butter. That is that list I showed you for the first, for that big listing of trades going back every year on the spreadsheet. That is what this is. The weekly charts is on a separate spreadsheet, but that's all the daily chart strategy with all the 90-something% wins. or 80 something to 90 something percent wins. That's all this program. So you're going to get 20 to 40 something potential trades a month. Everything I do is one-on-one with you. I can either meet with you via Zoom or in person if you want to come to Santa Clara. I meet people one-on-one in Santa Clara. And that is, my preference is face-to-face, at least for the first time, face-to-face. But if you can't make it face-to-face, then Zoom, that's fine also. But that is this program here. I will email you all the valid trades that come out that happen every day, so you can compare what you found valid with what we found valid. And I do that for at least 6 to 9 months. And I try to encourage people to have me go over their losses with them each month, because some people who I don't hear from for a while, I have found out it's because they messed up bad and they were afraid to tell me. I usually find that out later on. They messed up bad, they made mistakes, and they were afraid to tell me. So I don't hear from them for a while. They lost money because they messed up. And that's why I really encourage people, if you mess up, let me know. Let's fix that. That's why I want to see what are you doing with your trades? If you had losses, let's take a look. Your losses happen. As long as they're valid losses that happen through the natural course of trading, that's okay. If there were losses that happen because of some mistake, and it's not always your mistake, sometimes the broker makes mistakes, okay? The broker makes mistakes. There are problems with transactions. It happens more than you realize. But unless we had one person, we were looking at we were looking at their account and their trades, but they waited months before they had me review them with them. And then I went back months and months earlier. We took a look at trades. It's like, that shouldn't have been a loss. That shouldn't have been a loss. You had a whole bunch of losses here. Those shouldn't have been losses. What happened? Because they were losing money, but not telling me. And when we looked at them, it's like, they had a whole bunch of losses that should never have happened because they made an error on expiration month. And there were several losses that shouldn't have happened at all. So when we went to the broker and tried to figure out what's going on, the broker indicated there were charting errors, data errors that caused bad executions, but we would never have known that without. And the broker said, they can't go back and they can fix trades for you. It was a mistake on their end that caused you to have a loss. They can fix that, but it has to be done within a couple of weeks. They told me that because of the massive amount of trades that gets placed, your specific trade data, the specifics of literally how you fill the form out, literally what you put in the form and filled out, they only keep that for a few weeks. So if there's an issue with an execution, they need to see it right away. I had a loss. I had a trade that didn't execute. I looked at it, it's like, wait a second, I thought I had a great trade here. And then I looked at it, it never executed. I'm like, what's going on? They should have executed. So it was a call option, hit my target. I should have had about a 30, 40, 50% return on it. And then it came back down and I'm like, what's going on? It should have executed. So I got on the phone with the broker. We went through it. They made sure that I didn't mess up. And they agreed, your trade should have executed. There's no good reason it should not have executed. It should have been about a 40-something% return. And about a week later, they made good on it. They got me my money. Because they said, everything I did was correct. And it literally did not execute. And they fixed it. But if I didn't pay attention to that, and a couple of weeks later, that could just have been showing up as a loss, as a full loss, because I wasn't paying attention to my account. So you got to pay attention to your account and your trades and make sure things are executing that should execute, and executing correctly, and losses that are losses or correct losses, not your fault. But you got to stay active with your account and your positions to make sure because stuff happens that you will never know about. We had one of the coaching clients, they had a situation a few months back where, once again, trades did not execute correctly, and what should have been a win showed up as being a loss. And they got on the phone with the broker, and the broker explained to them that there was an error at the exchange where bids and asks was switched and executions did not happen properly. We would never know if he hadn't gotten on the phone with the broker with an issue and made an issue of it. And they explained, yeah, it was a problem, because they don't tell you it's a problem. You have to know that there was a problem and follow up on it. So those are the kind of things I try to look at with you each month. To let's go through your trades and losses and wins, make sure everything is going correct, and what should be a loss was an actual real loss. And so that's the stuff I like to do with people one-on-one. Usually a session is 1 to 2 hours, even handle more. Sometimes we do go longer, and I meet with people usually weekday on the afternoon, or Sunday afternoons, or Friday afternoons. Evenings by appointment only. Usually evenings is by Zoom, but weekends, Friday afternoons and Sunday afternoons, I can meet in person or via Zoom. Either one, but everything one-on-one, so we can customize everything for your specific everything. All right, so, and then for the weekly, we have 5 or 6 strategies, and for the market internal, 6 strategies. So if you did everything for the big coaching package, which is everything, that would be the full options package. Okay, so the 11 daily chart strategies, that's the 6 plus the market internals, and 5 weekly chart strategies. Actually a little bit more now. We actually added another one too, so there's actually more. For my regular clients, we actually keep adding on a little bit. And so, and for this one, anyone who wants to do this one on the meetup, I will take $500 off it for a total of $34.95. Let me know by the end of the week. It will take several months to implement all of this. Okay, several months. And what we focus on is what's valid right now. If it's stuff valid right now, that's what we're doing first. So we want to get in and make money now. So if it's valid now, we'll do that first. And then we'll go back with the general execution of the program. But we focus on what's valid now, so we can see about trading it live now, if at all possible. But this is what I do. And I usually take on maybe 1, maybe 2 clients a month. Since I left my full-time job way back when, instead of having one 40-hour-a-week job, I now have 10 different jobs I do at different times. So I'm really flexible. I work on films, I work on commercials, acting, stunts. I'm a city official in Santa Clara. I teach fitness classes, kickboxing, boot camp, Brazilian jiu-jitsu. I train in jiu-jitsu, parkour. And I just do different things, whatever entertains me. I just have fun with it, but I don't want to have any one job, so to speak. So I try to stay flexible, maybe 1 or 2 clients a month. Coaching wasn't something I plan on doing as far as options go, but since I'd been doing presentations for the local groups for so long, probably about 7 or 8 years ago, 2014-ish. So 8 years ago, 8, 9 years ago. People from within those groups started approaching me to work with them one-on-one, and that's how I ended up getting into options coaching. But it was people who have been doing presentations for us since 2007, and it just became another thing I do. So it's just kind of fun. But I try to make sure that, since it's people I know and people I see around here, I always say 3 to 6 months, but I don't limit how much time I work with you. People email me for the last 10, 12 years every day, make sure the trades are valid. They call me, they want to meet, no problem. So I don't limit the amount of time. So it's kind of open-ended time-wise, how long I work with you, but we try to make it whatever amount of time you need, that's how much time we'll put in. Need to meet with me 10 times, 2 hours each time, we'll meet 10 times, 2 hours each time. Need to meet just once. If people have only met once for 2 hours, never saw them again. And so everyone's different. So no matter what you need, we'll make sure we do what we got to do to get you to a point where you're trading live and consistent. All right, so I got a question here. Later on to do the full program. Yes, I will do exactly that, Mary. And I don't do Forex anymore. The reason was we switched to futures. The reason for not doing Forex is that we had only switched to Forex because margins on futures got outrageously high. So when we first started trading futures, we loved trading futures. That was 2008, 2009, all that time frame, 2007, 6. But then margins, like let's say one NASDAQ contract, it would used to be like $2,000 something in margin for one contract. And it went up to like $14,000 to $17,000 for one contract in margin just to open one contract. So where I would need like a $10,000 account, I would now need like a $70,000, $80,000 account to do the exact same trade. So we got margin out of the industry from trading futures. That's why we had switched to Forex. We weren't excited about Forex, but it worked for us. But what happened starting several years ago, about 4 or 5 years ago, they started the micro futures. So with the micro futures, we were like, yes, finally we can get back to what excites us. We love trading futures, myself and Becky. So we put all the Forex side stuff up back to the side, and we brought back in all of our future strategies. So we came back to trading futures back in 2019. We returned to futures. So instead of trading the Euro Forex, we trade the Euro futures. So we trade the currency futures, the Swiss franc, British pound, Canadian dollar. So we trade the currency futures instead of Forex, and we trade the NASDAQ, Dow, S&P, and Russell futures. So those are the futures contracts we trade. But with the micro futures now, it's literally 1/10 the size. So even though it might be let's say it might be $15,000 to get one contract on a NASDAQ somewhere there, $15,000, $16,000. It's only $1,500. It's 1/10 the margin to do the micros. And so we can trade at a smaller size and be within our realistic financial capabilities. So anyone can trade the currency futures at any size, and the index futures, we can accommodate smaller size accounts without needing several $100,000. But yeah, we love trading futures. It's my bread and butter still. For futures, we use Schwab. We've used Schwab forever. It used to be Options Express we traded with, and when Schwab took over, so we've just been trading with Schwab. You can trade on like Thinkorswim, but you can't trade everything on Thinkorswim because they just are not set up for it the same way as Schwab is. So you're going to try to trade something at a certain size, and they'll tell you that's not available, or that contract isn't available here. You can get a chart for it, but you can't actually trade certain things. So that's the thing. Schwab lets us trade whatever we need to and whatever size we need to. So it works out really well. Commissions are what, $1 something a contract, $1.20 a contract, big deal. So it works out really, really nicely for us trading at Schwab futures. All right. Unless you have any questions, we're gonna start to. Yeah, they're all owned under one ownership, but they operate separately. They're all separate sets of everything, separate platforms. They might all be under one ownership umbrella, but they all operate separately. So, and platforms stay separated, which is great. All right, unless we have any questions, we're going to call it a wrap for the day. If you're interested in any of the programs, please let me know before the week is over, and we can start setting up something for our next set of swings up, because we've been chopping sideways right now. Eventually we're going to break long or break short, but we're getting our buy and sell signal. We're trading up, we're trading down, and we're just going to keep booking profits as they happen. But let me know if you're interested in either daily chart program or the full program, which will take a few months to execute. This one we get into pretty quickly, and as soon as you're comfortable, we'll get you trading. I will help you set up a charts, whether it's on NinjaTrader. I will literally sit with you and set everything up with you to make sure it's right. So I will help you with everything. Okay, so I don't care how experienced you are, everyone needs some help getting the charts just right, and then we kind of go from there. So let me know, call me or email me. My email is all over the place on the presentation, you can use the contact form on the website. Contact form is right here. and also coaching program information is also on the website. It's all there also. So Lex, is there any platforms with demo money to practice futures? Thinkorswim has a demo platform if you just want to play around with it. But yes, we've had a few people do that on Thinkorswim. Thinkorswim is pretty much it. There's all other platforms, you have to have real live funds, but the Thinkorswim paper trading platform is something you can, if you just want to practice, that's a place I guess you can go and practice on the Thinkorswim demo platform. All righty. So I'll go ahead and wrap it up now. Like I said, if you need to reach me, my information is on the website, it's on the handout. And if you're interested in trading with me, please call or email me, and I will put the recording of this presentation out a little bit later on. All right, till next month, and we'll see, maybe some futures, maybe some currency futures, since I've been, and some other things related to some options as compared to the ETFs and how they relate to each other with those strategies. So till next month, you all have a good day.